Consider, for example, the hamburger bun. It requires a certain kind of mind to see beauty in a hamburger bun. Yes, is it any more unusual to find grace in the texture and softly curved silhouette of a bun than to reflect lovingly on the hackles of a favorite fishing fly? Or the arrangement of textures and colors in a butterfly's wing? Not if you're a McDonald's man. Not if you view the bun as an essential material in the art of serving a great many meals fast. Then this plump, yeasty mass becomes an object worthy of sober study. Fred Turner gave the bun that sort of attention. We were buying our buns in the Midwest from Louis Kirchner's Mary Ann Bakery. At first, they were cluster buns, meaning that the buns were attached to each other in clusters of 4 to 6, and they were only partially sliced. Fred pointed out that it would be much easier and faster for a griddle man if we had individual buns instead of clusters, and if they were sliced all the way through. The baker could afford to do it our way because of the large quantities of buns we were ordering. Fred also worked with a cardboard box manufacturer on the design of a sturdy, reusable box for our buns. Handling these boxes instead of the customary packages of 12 reduced the baker's packaging cost, so he was able to give us a better price on the buns. It also reduced our shipping costs and streamlined our operations. With the old packages, it didn't take long for a busy griddle man to find himself buried in paper. Then there was the time spent opening packages, pulling buns from the cluster, and having them. These fractions of seconds added up to wasted minutes. A well-run restaurant is like a winning baseball team. It makes the most of every crew member's talent and takes advantage of every split-second opportunity to speed up services. Once our bun box was in use, Fred kept coming up with little refinements on it. He found that the buns would stay moister longer in the box if the lid came all the way down to the bottom instead of halfway. He also learned that the number of reuses we could get from a box was increased if we had an extra heavy coating of wax applied by the maker. Oh, hello there. I didn't see you guys come in. I was just reading a little bit of Grinding It Out, the book by Ray Kroc, the man who didn't exactly found McDonald's, but he was featured in the new Michael Keaton movie. You should check that out. I forget the name right now. It's not The Master, but it's something like that. It's The Restaurant Man or something. But great stuff. Really interesting book, really interesting movie. And listen to what he was saying about the buns. You might not think the bun is a very important part of the hamburger, but to Mr. Kroc, who was running McDonald's, every little second he could save on that bun added up to minutes. He has so many restaurants, every minute added up to dollars. And every dollar he could save could make his business faster, could make them sell more buns, could make them sell more hamburgers. So it really is about those little details. And that's why it's so interesting with Bitcoin, like we were talking about the Lightning Network reference rate, the idea that we could have an established interest rate for how much money you'd make on Lightning Network fees. And that there really is no difference between the Lightning Network fees and interest, which is you lend money for a certain amount of time and you get a certain amount of money back. It's the same thing you're doing on the Lightning Network, even if it happens much, much faster. So that was a very interesting idea. We talked about that yesterday with Nick Bhatia and his papers on the Lightning Project. And we're going to talk more about that in just a second. But first of all, I want to start by thanking everyone for supporting the World Crypto Network. Thanks for donating Bitcoin and altcoins accepted on Trezor to this screen right now. Yesterday, we helped DJ Booth launch his new project. It's called Tallycoin, TALLYCO.IN. And though this project is still in beta right now, you can try it out today and you can use it. All you need to do is bring the QR code, the address from your Bitcoin wallet, paste that in here, put how much you'd like to raise in Bitcoin or USD right here. You could even say when your campaign will finish, and you get a cool countdown timer to when your campaign runs out. Yesterday, I started a fun campaign to try this out. Our goal was to raise $100 so that I could buy a vintage typewriter recommended by Tom Hanks. And thanks to your donations, we reached our goal. So here it is right here. Our goal is 100. It's been going back and forth as the Bitcoin price rolls up and down, but I think we can call this a win. This is a victory. And down here, you can see the various amounts that people donated. And it wasn't all one person. Well, it was mainly one person, but it was a group effort like everything else. And thanks to Tallycoin for allowing me to raise this money and buy this typewriter. We'll definitely be coming back to Tallycoin probably in the near future to raise something of more value, something like a plane ticket to Europe. That might be something we try to raise. Sure, I guess I really want to kind of try it out and try to raise $1 million or something, try to make the World Crypto Network a real business or something like that. But that might be too much. We might start with a $1,000 plane ticket first. But just like to thank everyone in the audience for being there. Make sure to give us a thumbs up and a share. That really helps more people find the show. So here's the typewriter that I'm going to order. This is the Smith Corona Silent Writer, recommended by Tom Hanks in the typewriter documentary American Typewriter, and a very interesting documentary. California Typewriter it was. Sorry, it's an amazing thing. It's a documentary about this shop in Berkeley, California, that is still repairing typewriters. And they had a rough go of it there, but we started to turn a corner. And I think all the hipsters are buying typewriters now, and they need a place to get them repaired. So the shop's only open about 3 days a week, but they're very busy. So this will be an interesting typewriter. I've never had a manual typewriter before. As you can see, this big metal piece here, you have to slide that back at the end of the line. This is something totally new and unique to computer users. You're used to just pushing enter or return, but that actually means carriage return. This big piece here is called the carriage, and when you pull this lever and slide it back, you are the carriage return. What's neat about this machine, it has no plug. It takes no electricity. Looks a little dirty on the tops here, but it looks pretty clean down here in the typing mechanism. It's tough to say. I don't even know the age of this machine, but I want to say 40s or even 50s. It looks super old. As you can see here, it seems to be working in general working order, which is good because I want to write poems and other stuff on it. I want to demonstrate it on the show, especially because you guys helped me buy it. But yeah, check out Tallycoin. You can raise money for anything you want, kids, adults, anybody, a charity. A guy in the chat says he might use it to get a new camera. That'd be a great idea. And this would work even if you're not a big Bitcoiner. Maybe you just have a blog and you just put your photos up there. You could tell your photo community, you can be like, hey, do you like my photos? Do you want to buy me a new camera? This is not a paper wallet generator. All this does is scan your Bitcoin address to notice changes, and it gives you the ability to use this thermometer, which is a big part of fundraising. A lot of fundraising is just about saying, we raised this amount yesterday. Our goal is this amount. Please help us. And then you come back the next day and you say, hey, we raised this amount yesterday. We're closer to our goal. And, this motivates people. People are excited to see you reach your goal. A guy yesterday saw that we were only, 60, $70 from our goal. And he said, okay, I'll buy the goal. And, oh, the typewriter? Yeah, the typewriter generates paper wallets. I did meet a girl on the street. She had a very small typewriter with her, and she did poetry. And of course, I asked her for a poem about Bitcoin, and she obliged me, of course, and it was really neat. And part of this California typewriter documentary, a different girl, I think anyway, a different girl was talking about her typewriter and how her typewriter is like the special source of her poetry. And she does the same kind of thing. She does live poetry at art galleries, and people pay her $5 for a poem. And they tell her kind of like what it's supposed to be about, like, their lost love or something like that. And she believes that the typewriter is an integral part of making the poems, and that the two of them work together on the poems. So I'm interested to try that out. I'm interested to try writing on different machines. This machine will have a certain feel to it. The IBM Selectric will have a certain feel to it. I even got a Royal typewriter, so I'm up to 3 here and 1 at home. That's a total of 4. I'm becoming the typewriter version of a cat lady. But let's move on to what we came here to talk about today. This is Bitcoin Talk Show. Today is Thursday, July 26, 2018. My name is Thomas Hunt, and here's what's going on today in Bitcoin. The price of Bitcoin is up 0.59% in the last 24 hours, with a last of 8,219, a high of 8,317, and a low of 8,067. That's $1 for 12,175 Satoshis. Checking in with Coin Market Cap, Ethereum's up about 1%, Ripple up 1%, Bitcoin Cash up 0.5%, EOS up 2%, Stellar up 7%, leading the board. Litecoin up 0.5%, Cardano up 1.5%, IOTA up 5.3%, and Tether holding steady. That's the top 10 altcoins for today. Yesterday, we talked with Nick Bhatia about his unique articles, The Time Value of Bitcoin, and his idea that we could establish a Lightning Network reference rate, a way to say how much interest you'll receive on the Lightning Network that may draw larger lenders to the Lightning Network and might be able to build an entire ecosystem of Bitcoin based financial options. Last night, we talked about Nick's new article. Went away. Where'd it go? But his new article, The Bitcoin Risk Spectrum, and the various ways in which Bitcoin can be risked, and the way that the Lightning Network reference rate could work into this. Nick and I talked about the idea that the United States government has this dollar risk spectrum based upon the US Treasuries. At the base, in the least risky investment, is the US Treasuries, followed by corporate bonds, equities, and venture capital. And what we proposed is that you would create a new one of these charts with Lightning Network reference rate at the bottom. Maybe below that, you have cold storage, but of course, cold storage doesn't generate you any fees, actually might cost you money because of the money it takes to store it, buying a hardware wallet, renting a safe deposit box, whatever your security methods may be. And that above that, we would have this Lightning Network reference rate. Then beyond that, people could lend money on top of that. There could be other things on top of that, and we could build an entire Bitcoin-based economy. Really interesting stuff. Be sure to check out our interview. It's right here on the World Crypto Network. You can subscribe down below or go check out the interview. We also talked a little bit about Nick's articles, next step for node rates, what kind of things we need to do to make this Bitcoin spectrum come alive. And also we talked about observations from Alex Bosworth's tweet on fees. And at least in the current system, Mr. Bosworth is raising 0.4% interest, whereas Andreas, not Andreas Antonopoulos, is raising 0.005% interest. So there really is something to this idea that the way that you run your Lightning Network determines how you get, or your Lightning node determines how you get fees. Something that Alex is doing is better at dealing with bad actors, better at dealing with potential security problems, and he's out earning the other guy here. And what's really so neat is that his principal is so much less. He's invested less money, but he's using it more efficiently, so he's raising more interest. There's nothing like this in the current bank system. It's as if your bank account was a video game, and if you were good at that video game, you could play it better and earn more money. There's nothing like that at all. So it's a really exciting new market. And we've got the links to the videos right here if you guys want to check them out. We might play a little clip from that later if we're not getting enough phone calls. But let's move on. Up 45%. Is Bitcoin's price preparing for a bull market? And this is from Omkar Godbol at Coinbase. He says, as of the writing, Bitcoin is changing hands at $8,300 on Bitfinex, having clocked a 2-month high of 8,507 on Tuesday. The daily chart seems to be in a falling channel breakout. The 4-hour chart says that the rising channel is intact. And let's move to the view. Bitcoin has likely witnessed a long-term bullish reversal this week. In the short term, Bitcoin may struggle to find a firm foothold above the all-important 200-day moving average of 8,593 because of overbought conditions. Bitcoin could revisit the 100-day moving average support of 7,616 if the bearish RSI divergence seen in the 4-hour chart pushes prices below 7,938. The rising channel support. Sounds pretty bullish. Hold on to your hats. Prominent investor, Bitcoin is heading towards a new all-time high. Bullish momentum. We've got nothing but good news this morning from the mainstream media. Spencer Bogart from Blockchain Capital is bullish about Bitcoin. Tom Lee from Fundstrat is sticking with Bitcoin. He's continued to stick with his prediction of, I think, 20,000, maybe even $25,000 a coin by the end of the year. And we've just got more news like that. BitMEX shatters industry record with daily turnover of 1 million Bitcoin. The global trading platform hits a major milestone for 24-hour Bitcoin trading volume amid the price rise. So BitMEX, where you can trade with futures and you can trade with leverage and interest and margin and all those things, is really blowing up. This again just shows how much interest there is in Bitcoin, how many people want to get into this market, and that it's not just banks and other large institutions. It's also rich people and traders and investors of all stripes and kinds. And when they see a move like this, when they see Bitcoin go from 6,000 to 8,000, it starts to change their mind. And as we talked yesterday, a lot of trading, a lot of prediction basically is just about the trends. If we're in a downtrend, you just go on every day and you say, hey, we're going down. We're in a downtrend. But the problem is it's hard to tell when we switch over. When we switch over into an uptrend, because then all you have to do is say, hey, we're in an uptrend. The price is going up. But those switchovers are the hard part to find. And what the CoinDesk guy is saying that we're very close to a switchover. We don't know for sure. Certain people are changing their minds. Some believe it's bullish, some believe it's bearish, but we are getting close to it. And we're seeing a phenomenal amount of interest in Bitcoin on all of these exchanges, on Robinhood, on Coinbase, Cash App. All of these companies are getting up and getting in to Bitcoin. Crowd psychology drives Bitcoin's price, survey finds. No shit. A herd mentality has been behind Bitcoin's recent price surge. And you could say that about a lot of markets, right? A herd mentality led us to Facebook. Today, a herd mentality is leading people away from Facebook. Maybe they'll come back. I don't know. But yeah, Bitcoin's trading higher. This was the most surprising part. Respondents to the survey believe that crowd psychology is the major driver of price. So this is pretty funny. They asked the crowd about the crowd. Let's move on. Any number of catalysts could send Bitcoin price exploding higher, says blockchain venture capitalist. Oh, this is Spencer again. Spencer Bogart from Blockchain Capital. Good stuff. He's getting around. He's doing the media runs. He's putting the quotes out there. Here's his quote. He says right here, Bitcoin is kind of a tinderbox right now, waiting for reasons to go higher. That's exciting. Somebody needs to light a match. Bitcoin is king again from FX Street. Hail to the king, baby. I don't think we were ever not king. I totally disagree. This guy believes that SEC regulated cryptocurrency ETFs are on the way, as opposed to the other article saying that it was simply crowd psychology and people felt good about Bitcoin going up, so it went up more. This guy says there's an actual reason. Cryptocurrency ETFs on the way. Shop smart. Shop S smart. Bitcoin's hot and Wall Street wants in again. Well, duh. This is going to happen. We know this the whole time. This is nonsense. Again, it's good to hedge and to be ready either way, to have a little cash in case the price goes down, to have a little Bitcoin in case the price goes up. But still, the price is back. They're excited about the ETFs. CBOE Holdings is filing an ETF. They also said that their volume was up 90%. Their open contracts was up 50%. They are selling the heck out of these Bitcoin futures. And they're going to expand. They're probably, like it says here, they're going to go into Ether futures. They're going to go into all kinds of other futures. Wall Street can't wait to start working with Bitcoin. This is a big turnaround from 5 years ago. 5 years ago, every article from Wall Street said that it was tulips, it was a Ponzi scheme, it was a fraud. Now they're getting in and building platforms around Bitcoin. This is what it's like to be right. Get ready for more. And we just got Twitter right there. And I think it's time to open up the phone calls. There's my typewriter. Ooh. But we'd like to go ahead and open up the phone call. So if you'd like to call us live on Skype, SKYPE WorldCryptoNetwork, all one word. Or if you'd like to ask us a question in the chat, we'd love to hear from you either way. And we're just getting this set up this morning. And if there aren't any calls, I might play a little bit more of my interview with Nick. Let's see. This is the old one or the new one? So this is the new one right here. So I'll get that ready to play in case you guys don't call in or have something to talk about. Let's see. No Man's Sky update. I didn't even install the update yesterday. I know it's going to take an hour. I need to get the PS4 running and just get it downloading. But no, I didn't get to install it, didn't get to play it, didn't watch any movies yesterday. Drove around, bought some clothes, got some more books, I think. I'm always kind of getting books. Oh, yeah, I got the McDonald's book, and I got this other really cool book. It's not in this room, so I can't read it to you. It's a bummer. I'll get it for tomorrow, but it's called Humanity by Ai Weiwei, the Chinese artist. And it's a series of quotes, and I found a lot of them to be really moving and really intelligent. So I thought it was a really good book. Metal Gear is asking if No Man's Sky is decent in the chat. The first time I played it, I was on the second update. I think it was called the Atlas, or I might have been before the Atlas update. I thought it was kind of fun. It kind of drops you in there. Like Star Trek, you're out in the middle of the galaxy. You have to go mine things. You have to add things to your ship. I found it to be very difficult to get enough things to go to warp. So I kind of got stuck on a planet a bunch of times, and I didn't really have any. I had some minor interactions with the space aliens on the ships, but it quickly became just kind of a grind. Going to a planet, mining plutonium, going to a place and selling it, going to a planet, mining plutonium, going back to the place and selling it. The new update is supposed to be better, interactive, more aliens, drive you to things, make the world not seem so abandoned, and hopefully they made it cheaper to warp drive and stuff. Um, Blake James in the chat says No Man's Sky is pretty cool, exploration and building, but there's no real story. I found it was just difficult to progress forward. I didn't know what I was supposed to be building or buying. I wanted to get a bigger and better ship, but I kind of fell back into like a trade wars trap of just mining things and selling things and mining things and selling things. And then I stopped playing for like 6 months. There is a new update. It's a really unique video game. Even if you aren't into video games, you have to kind of appreciate what's going on these days. They released this video game in kind of an unfinished fashion. They were in a hurry and all those things. They needed money, and the reaction to the video game was pretty bummed. People thought that it was going to be a lot better than it was. Then they released a huge update to the video game for free. So the programmers are still working on this video game, despite the fact that it's pretty much already sold, and the people that are going to buy it bought it, and the people that aren't going to buy it didn't buy it. So now they've released a whole third new update to this game, and hopefully it's a good game. And I suppose from the company's perspective, maybe they're already working on No Man's Sky 2, and they're just going to roll this over into the new product. But for me, it's very strange for a product that I've already paid for to keep improving itself, wanting me to play it again. So that was pretty interesting. Chester Copperpot says the interview with Nick wants him to make him send his dollars to the museum. And it really does seem like dollars are antiquated and old. One of the things Nick and I talked about briefly was that the millennials, they don't want anything that's not on their phone. So cash already seems completely foreign to them. Bitcoin is right up their alley. And when you give them a couple of these little tricks, like you can make interest on your Lightning Network Bitcoins by storing them there, or you can play with all these crazy altcoins and make money that way. And there's just a lot of neat ways to use Bitcoin, and they're all on your phone, and they all involve technology. And I just think it's a perfect storm. The next generation doesn't want cash, doesn't like banks, doesn't want to go anywhere. Like when they're not going to go to the ATM every weekend to get their money so they can spend it. They're going to expect their money to be on their phone. And I don't think they like middlemen. I think they learned a lot from the Occupy Wall Street movement and other things like that, even though they were, blips on the radar. They weren't lasting updates, lasting things. But yeah, I think there's a lot to do there. And it's a very cool interview. So let's see. Bitcoin and Coffee watched the new Tomb Raider. Oh, how was that? The movie? I seem to recall seeing the Angelina Jolie one a long time ago. Thought it was pretty good. The new one looks okay. I don't know. It's funny what a simple idea for a video game can become so many movies and games and other stories. Tomb Raider, from the original idea, was kind of just a pretty girl character that you could do jumping and puzzles and things with. And everyone loved it. They were all super excited to have a pretty girl video game character. She was maybe not the first, but probably the first to, have her own game and, that kind of thing. I don't know. You could go back and forth on that. Uh, let's see, we're still talking about video games. Blake says, "There's a flood that set the game back a year, only a few months before the release. They lost a lot. These updates are what the Steam game should have been." Oh, interesting. So there was a physical real world flood, like that the programmers lost data or maybe their offices were flooded or something. I don't know the details on that, but yeah, that's too bad. I'm excited to have the full No Man's Sky experience, although I'm a little jaded from previous experiences. Metal Gear also says that it's 50% off on Steam right now. So good deal on No Man's Sky if you want to try it out. Space exploration type game. At least that's the goal. So, Rob asks if the new Purge is good. I actually haven't seen it. A friend of mine's visiting town next week, and I'm waiting to see it with him. It looks pretty good. I've quietly become a fan of these Purge movies. I watched them kind of in a like let's watch something silly type thing, but then the first one is a really good closet drama. It's on a smaller scale, a smaller budget, even though it has even Ethan Hawke. The second one is kind of the Purge in a city. It's a much bigger scale to it, and then the third one, the Purge gets really political. And I thought that was a very interesting route to take it, and what I think so interesting about The Purge is that it's based in our world, right? I mean, the Handmaid's Tale is, our world, but a little different. The Purge is like really our world if a couple of things changed. It's still America. It's still the founding fathers. It's just there's a new group of founding fathers in between there who have decided that we should have this day of violence to get everything out. And this day of violence on its face is supposed to be a purge, like an emotional purge, but as we learn from the films, is actually kind of a classist and a racist thing. That they're actually out there killing all the people they don't like, killing the drains on society, trying to bring their society up, and that's where it gets really dark. And it's kind of like Shirley Jackson's The Lottery, where they're killing people every year to keep the population down, and it's a lottery, and you don't want to win. So they ask if I'm thinking about running a Lightning node. I might want to run it as a demo or just as a way to learn about Lightning. I'm not that crazy about running computers full time, especially in the hot environment that I'm in, Las Vegas. We do run the air conditioner most of the time. It would probably be okay, but I don't really want to add more heat and fans to that system. Also, I'm still scarred from my experience years ago of running Bitcoin miners and altcoin miners in the house and hearing all this fan noise in the back of my movies and so forth. I don't have a very big house, so it's pretty easy for those miners to overtake your whole world, and they barely covered. So the only reason we accidentally made money on mining is because we held some of the coins for 3 or 4 years, and then we discovered them, and then it was like, haha, we made money. So it's a tough business. I definitely agree with Rob here. I thought the third purge was the best too, um, but I have hopes for this new purge. It looks fun. I've also heard. I don't know. I don't want to do spoilers, but I've heard there's some kind of a credit scene with Donald Trump, or somehow Trump is related to the purge. So I don't know the details, but I'm excited to see that political aspect of that movie expand a little further. I did see Hotel Transylvania 3, but that's just because I bought Movie Pass and I can go to all the movies now, so I was bored. Since we're not getting any calls, let's check in with just a little bit of my interview with Nick Bhatia from yesterday about the Lightning Network and the interest rate. I think we get to the key questions pretty quickly, so I'm just gonna start it from the beginning here. We'll play about 5 minutes of this. I'll hang out, see if there's any calls. Otherwise, we might just play the whole interview. Who knows? But give us a call now, or we'll listen to this interview for a while. So here's Nick Bhatia and the Lightning Network interest rate. Good morning, Bitcoin, and welcome to a special evening edition of Bitcoin Talk Show. Today is Wednesday, July 25th, 2018. My name is Thomas Hunt, and here's what's happening today in Bitcoin. The price of Bitcoin was up 0.42% in the last 24 hours, with a last of 8,205, a high of 8,434, and a low of 8,067. That's $1 for 12,182 Satoshis. Today, we're talking to Nick Bhatia, the author of the article, The Time Value of Bitcoin, which we talked about last time Nick was on the show a couple of weeks ago, about how you could actually make interest or have an interest rate when you loan money on the Lightning Network. Now, Nick's back with a new article called The Bitcoin Risk Spectrum. So let's talk to Nick about how the Lightning Network can generate interest and Bitcoin and risk. How's it going, Nick?
It's going well. Thank you for having me again. I appreciate it.
Well, thanks so much for being here. I really enjoyed your article. I just read it a little bit before the show. The part that really stuck out to me, and I'm going to go ahead and skip to what I thought was the best quote, and so did all the highlighters. They tell me on Medium. It's just like the Kindle. I get those little reader insight things. But it says right here, the top highlight, Bitcoin staked to Lightning is the most unique income producing asset in all of monetary history. Income with no counterparty risk. The historical implications of this on capital markets are tremendous. So let's just start there. What does that mean? Why is Bitcoin staked to Lightning such a unique income producing asset?
Sure. So before I get into why it's so unique, I want to clarify about this zero counterparty risk. I'm not saying that there is zero risk. That is not true. With Lightning Network, if you have Bitcoin in your Lightning payment channels, you do have security risk because your keys are stored in a hot wallet. And you also have the risk of losing your Bitcoin via poor uh, payment channel management. So that would be not executing your smart contracts properly, and if you have a malicious counterparty. So there's definitely some risk. But the unique thing about Lightning Network is that the coins are still in your custody, right? And that is what makes this such a unique income producing opportunity, because in the real world, if you want income, you actually have to physically lend money to somebody. And that means that person or entity can default to you. In Lightning Network, a malicious counterparty can try to steal your Bitcoin, but you have the ability to always broadcast what you know as the correct state. And additionally, there's a mechanism that dissuades any sort of fraud where you can actually sweep the Bitcoin of your malicious counterparty if you catch them. So risk, yes, but direct default counterparty risk, in the traditional sense, no, on Lightning Network, and that's what makes this, such a unique moment in monetary history, really.
Now, you have a chart in your article I think we should spend some time talking about. On the for the podcasters at home, on the left side of the chart, it shows cold storage Bitcoin, and you have almost no counterparty risk. You hold the keys, they never move, they just stay there. A little bit above that, you have the Lightning Network RR, the Lightning Network interest rate. Maybe above this, in the middle, we would put lending your Bitcoin on an exchange, like you said, that you actually have to trust the exchange with your Bitcoin, whereas with the Lightning Network, you still control the keys. And then over here on the right side, with a lot of counterparty risk, is off-chain lending that I know a little bit about because I worked at a Bitcoin loan company back in the day. And as hard as we tried to properly verify people and to make sure that they were who they said they were and that they were going to pay back their loans, a lot of times people just took the money. Whenever you, and that was, we were actually letting them take the Bitcoin off the website. So that was a significant risk. So how would you weigh the various risks of these various options?
Right. So the point of this graphic here is to show really the wall between counterparty risk and no counterparty risk. When the Bitcoin that you have is in cold storage, you don't have any counterparty risk. The only risk that you have there is a private key management risk. If you store your keys on a single USB drive that you lose, that's a huge risk that you're taking. But if you have a really good multi-signature storage method, that can be potentially less risky. But in the end, that cold storage security is up to you. Lightning Network also provides a similar type of opportunity where you can make some income through routing fees. But again, the security of that Bitcoin is up to you. And beyond that line that I show, that's when it switches over to direct counterparty default risk. So that would include both the direct lending that you referred to, but also exchange lending. Because while there might be a risk difference between exchange lending and direct lending, both of those still require you to send an on-chain transaction, and the Bitcoin is no longer in your storage, in your custody. So the point of that graph is to show the difference between when the Bitcoin leaves your wallet and when it doesn't. And so Lightning Network, in Lightning Network's case, it does not, and that's why I have it on the other side of the line there.
Now I'm seeing some concern from the chat. I'm sure they all want to know how we can keep our Bitcoin in our wallet or in a Lightning channel and still have control of it, yet at the same time still make interest. Does this make Bitcoin into a bank? Is there some kind of suspicious fractional reserve going on? How will people make interest? Just to recap, people that haven't read the first article.
Sure. So the interest is made via routing fees. So it's a zero-sum game. There's no fractional reserve going on here in Lightning Network. All Lightning transactions are Bitcoin transactions, and they're not valid unless there's a real Bitcoin there, because anybody can check the blockchain to see if that Bitcoin that you say that you're spending is actually yours. The interest comes from other people in the Lightning Network that are paying you to use your channel. So if you are, let's say you're buying a sticker from Blockstream, and you open a Lightning node and you only have one channel open, and that the channel is open to an entity that's not the Blockstream store, right? That payment can still get to Blockstream, but it's going to have to take a couple hops, right? And to get and to have access to Blockstream and Blockstream's node, you're going to have to pay to consume some time in each channel on your way to the Blockstream store. Each time you use a channel to get there, you're going to have to pay that node a fee. It could be as low as 1 Satoshi, or even I think sub Satoshi is possible in the Lightning Network. So anyway, that the fee is coming from the person that's using your channel, and then that person will have one less Satoshi to his name, and you will have one more Satoshi to your name. And that's where the interest comes from. It doesn't just appear out of nowhere. There's no fractional reserve going on. It's just somebody paying you for that privilege to use that channel. Now, I heard somewhere on one of the shows on World Crypto Network that they don't consider this interest, right? They consider it fees. While it is a fee and not necessarily interest, the only way you can make that interest is if you stake capital up front, right? You're making the money because you have payment channels open with Bitcoin in them. And so it requires capital. And you don't know how soon you're going to get that money in terms of routing fees. So you have to keep the channel open for a certain amount of time until you can make fees with it. So time, initial capital or principal, and fees are the three components to any interest rate calculation. So, it can be a matter of semantics, but the bottom line is you are taking money, locking it up, and making money from that. That's the definition of interest. And Lightning Network is a new technology, so if we want to call it something else down the line, we can. But for now, an interest rate is a decent analogy, I think.
Now, when the Lightning Network was built, it was built on a hub. Well, intentionally or unintentionally, it ended up with kind of a hub and a spoke model, where someone like Amazon might want to come in and be the lender, be the Lightning lender, be out there, have a bunch of hubs, manage their channels really well, excel at that, and then make more money from Lightning. Is that how you'd see the Lightning Network working? And is there a danger there of some kind of centralization, something like that?
There's always a danger in a free market of monopolization. Uh, and so, is it possible that one single entity like Amazon comes into the Lightning Network and just undercuts everybody on fees and has the most channels open and stakes the most Bitcoin so that they're the best positioned node in the whole network? Yes, unfortunately, that is possible. But this is a free market here, and so I hope that that's not the way it evolves. But I'm there's nothing. The Lightning Network already exists, so if Amazon wants to come in and do that kind of thing, they're welcome to do so. There are no barriers to entry other than the software that you run
And this
and
is one of
the
the
Bitcoin that you have to stake.
And this is one of the ideas for what we're going to do with Bitcoin after 2120. Perhaps a company like Amazon will require the network so much for their business that they'll be willing to mine it as a public service. This kind of ideas and or higher fees or something like that are the kind of ideas being floated for the 2120 running out of Bitcoin reward problem. So it's a similar situation. And if they came in and ran the Lightning Network as well, I mean, it's a little creepy, but other than that, they're providing a public service. They have a reason to do so. They want people to keep shopping on their website, presumably with Bitcoin and Lightning in the future. It may be something we have to accept.
And think about this. Let's say they charge 1 Satoshi to use all of their channels, right? And that's a lower price than other people want to charge. Then you're actually sending Lightning Network transactions for cheaper than you would otherwise. And if somebody wants to say, I'll only charge you half a Satoshi to use my channel, that person can do so as well. So it's going to be a free market. If one entity dominates, hopefully the price will be less for all of us. I know it scares people to think that it could get centralized, um, but it is a free market. If you don't want to use them, you don't have to. You can pay 2 Satoshis and use somebody else.
I'd just like to ask everybody at home to give us a thumbs up and a share. That really helps more people find the show. And just to go on with what you were saying earlier, um, why do we need this word interest? I think a lot of the reason that we need this word interest is because we're attempting to establish something here. Something that you showed in your article was the expected return, and we start out on the far left with U.S. Treasuries. We go up a little to corporate bonds, up a little to equities, and then up a little to venture capital. Venture capital is much more risky than the US Treasuries, even so much that you have the examples here that Walmart would sell bonds at US Treasuries plus 0.6%, and General Motors would sell bonds at US Treasuries plus 1.37. And that once we've established this basic rate of the US Treasuries, we have the least risky investment in the system, then we can establish the other systems of investment. Is this something we could do with Bitcoin if we establish this lightning rate as our US treasuries?
Absolutely, I think so. And again, these are just loose analogies. Bitcoin is a new asset class, and so we might use certain analogies from traditional finance, and we might have to reinvent the language that we use. But I do think this example of showing a low risk to a high risk spectrum is a decent one for Bitcoin to follow. So the lowest risk is going to be cold storage, right? But the return on that is actually zero or potentially even negative if you factor in how much money it costs you to have your cold storage method, whether it's paying for a hard wallet, or if it is buying different computers that are air gapped from the internet, etc. Right? Your return is actually almost potentially negative with cold storage. With Lightning Network, it can be possibly slightly positive, but also maintaining custody of your own private keys. Uh, and then, in theory, again, this might not end up happening, but in theory, if you're going to lend to somebody by actually sending them Bitcoin and broadcasting that transaction on the blockchain, the Bitcoin is no longer yours, and you have to hope that repayment happens. That risk should, in theory, be rewarded higher at a higher interest rate than you would earn on the Lightning Network, and so on and so forth. So the Lightning Network is potentially a way to establish baseline interest rates that a lender will, want to charge an interest rate above. So, for example, if you know you can make 0.4% on the Lightning Network by starting a node and charging fees, and having really good payment channel management techniques, uh, and then you knew you could lend to somebody on the street for 0.2%, the odds are you're not going to make that decision to lend to the person on the street because you can lend to the Lightning Network for a higher interest rate. But if the person on the street is willing to pay you 5%, you're like, okay, should I make 5% by lending to this random person? Or should I make 0.4% by lending to the Lightning Network? And that spread of 4.4% or 4.6%, sorry, that is what we consider a risk premium in finance. So that's the premium above the lower risk alternative that you need in order to make that loan. And these types of relative value comparisons are the foundation of any capital market. That's why in the article I give the example of Walmart and General Motors so that you have an idea that they both are relating their bonds to the US Treasury rate, right? And then you can look at Walmart and General Motors and look at each spread to US Treasuries and say, okay, I can see that the market thinks Walmart is more creditworthy than General Motors. Now, you might have a different opinion. You might think Walmart is being threatened by Amazon, and I think General Motors is going to still keep making cars. So you say, I'll take the extra risk that's perceived by the market, get an extra return, and that's the decision I want to make. Other people might think that Tesla is going to put General Motors out of business and they'd rather be in Walmart. So those types of decisions happen every day in capital markets, and hopefully are going to start happening in Bitcoin, where rates across the risk spectrum will be more transparent for everybody to see.
See, and there's a bit of a pushback in the chat. I see this more as things we need to do so that Bitcoin will be taken seriously. If people can't base their loans on something, they don't have that establishing number, we can't build all of these other structures on top of that. And if we're going to replace the whole financial system, like I think we're going to replace it, we're going to need all of that structures, whether we like them or not. Now, some people are comparing this to a central bank, but I don't really see this as a good comparison because a central bank, so much of it is about making those deposits and then making more deposits and making more deposits, and they don't really have the assets. Whereas if you're going to stake Bitcoin on the Lightning Network, even if you're Amazon.com and you're the bluest blue chip stock in the world, you actually have to buy the Bitcoin. You actually have to stake the Bitcoin. They have to physically be there, or the system just doesn't work. So, would you compare this to a central bank?
No, definitely not. A central bank issues a currency, and so the Lightning Network doesn't issue a currency. The Lightning Network uses a currency called Bitcoin. Uh, the Lightning Network is actually more akin to an interdealer market, and what that means is that um, it's actually more similar to a fully reserved interdealer market. And what I mean by interdealer is banks that trade with each other, right? The banks are not the entities that create the currency in a fully reserved system. In a fractionally reserved system, a bank can create currency. They have to have reserves of the base currency, but they can create money. In Lightning Network, you can't create money. You have to have the money to put in the channels to facilitate that flow of money from dealer to dealer, or in this case, node to node. So I actually see Lightning Network more like uh, a fully reserved interbank market. Interbank or interdealer kind of mean the same thing. Now, so you can think of a node as a bank, sure, that you can make that analogy because they'll have channels coming in and going out, and they're facilitating payments, but they cannot create Lightning Bitcoin. That there's no such thing as a Lightning token. Lightning Network is just a way for people to transact real Bitcoin with each other. And so, I think the analogy of a central bank is a poor one, and any criticism of this being a fractionally reserved system, is, in my opinion, inaccurate.
And that's why I think this is such a unique idea, going back to the initial quote that this is the most unique income producing asset in all of monetary history. Most of the rest of the time, if you want to make money off something like this, you have to trust the stockbroker, you have to trust the exchange, you have to trust someone else who's going to hold that money producing asset for you and send you back the little pieces of the money. This is the first time, like you're saying, and with the technology where you actually hold the lightning keys. If you have a malicious counterparty, if you have some kind of a security problem, you could always pull what you have back in Bitcoin and then it's yours. You have it again. Right now, there's a lot of exchanges. There's a certain exchange, it rhymes with a baseball term, BTC, and people are very uncertain about it and they're taking their money out and they're worried that they're going to lose all of their money. In this situation, if you were lending your money on Lightning Network, even let's say it was like $1 million and you were lending $1 million and you decide all of a sudden you don't feel good about the Lightning Network, something's changed, you could still claw it all back. Is there any other asset that's like that? Any other stock or bond or anything even close?
No, and if you think about the U.S. Treasury, that's why I put that example in the article. The U.S. Treasury hasn't defaulted in a couple hundred years, and so in nominal terms, that's a way of saying that they always pay back the money, whether it's worth as much as it was when they borrowed it in the first place. Money can erode over time, especially in the fiat world. But yes, they always nominally pay you back. But does that mean that the U.S. Treasury will never ever default, or that they could not ever default? No, there is still that possibility. So it's considered the risk-free asset in finance, but we all know that the correct term should actually be the lowest risk asset in the system perceived by the market, right? But that's too long, so we shorten it to risk-free, and especially because the U.S. government has exhibited a very, very high level of creditworthiness over a long period of time. That's why the market considers U.S. Treasuries the risk-free rate. But still, the potential for the U.S. government to default is always going to be there, and so that's not really the case in Lightning Network, where you have the ability to close channels and broadcast correct states to the blockchain, and then take back custody into your own cold storage.
And that's really what's so exciting about this. Because of the technology, we can say things like there's more than a non-zero chance that the US government might fail, but there's closer to a 0% chance that the Lightning Network would fail. We're actually under them. They're practically unbeatable. Like you say, they're risk-free. Everyone uses them as the standard. But underneath that is this new possibility with Bitcoin. Just in the same way, the gold bugs thought they had the perfect asset. It's held value since Roman times. It's a little difficult to carry and it gets pretty heavy if you have a couple of bars. But compared to Bitcoin, they didn't see what was coming. They didn't see it hit them at all. So if we're under gold, and then if Lightning is under the bank rates and the treasuries, what's next? What else is there for Bitcoin that we can take down in the old financial system?
So you bring up two things that I want to address. The first is the Lightning Network having a risk that's potentially less than the U.S. Treasury. So I'll push back a little bit. If we look at where the U.S. Treasury rates are for, let's say, 10-year U.S. Treasury bonds, they're around 3% right now. If you actually look at Germany, in the 10-year German Bund rate, which is their government bond, that's actually underneath 1%. So Germany actually has a lower interest rate than the United States, but those bonds are denominated in euros, right? Our bonds are denominated in US dollars. So Bitcoin Lightning Network income is going to be denominated in Bitcoin. So you actually can't make the comparison across base currencies. You can't necessarily say that Germany is more creditworthy right now than the United States because they have a lower interest rate, because the denomination of the currency is different. So Lightning Network income is going to be denominated in Bitcoin. And so you can't necessarily make that comparison to something denominated in dollars. So that's the first thing. And the second thing I want to address is about gold. This is actually part of the reason why I decided to dedicate my time to this idea of Lightning Network interest rates, because the knock on gold has always been from traditional finance that it's a pet rock. there's no income associated with gold. And to be honest, they're right. Just like if you have a gold coin in your pocket, that gold coin is going to be still one gold coin tomorrow. You're never going to make money from that gold coin while holding it in your pocket. If you want to make money from it, you loan it to somebody, but you have to hand over that gold coin. And hopefully, in a year's time, he hands you back a gold coin and then, a little bit of interest as well in the form of gold or whatever, denomination he wants. So Bitcoin now having an income opportunity and getting to actually graduate above this digital gold analogy that we've had for Bitcoin for 10 years now, I think it's really, really exciting.
That is pretty exciting. Gold people have never had a way to make interest. They've always held their asset, and that's been enough for them. But if we were to offer people a store of value that you could also receive interest on, we're beating gold.
Right. And again, that to go back to what we were talking about earlier, the interest is in the form of routing fees. But those routing fees don't just come out of nowhere. It's a zero-sum game in Lightning Network, and those fees are going to be paid to you by somebody else who's going to have less Bitcoin than they previously did.
Now, you mentioned at the end of the article that you're going to need UX or UI changes to the Lightning Network. What kind of changes do you envision to a Lightning wallet? Would it show you the interest rate before you stake your Bitcoin, something like that? Or is there more that would be needed?
Well, so I don't have any command line expertise when it comes to Bitcoin. So I need, for me to be able to have a Lightning node then and manage all my payment channels, I'm going to need some sort of better user interface. So I was more, speaking from those terms, but also, yes, hopefully in your Lightning wallet, we'll have a way of seeing, this is what you've earned in terms of interest rates on your node so far. This is what you could potentially earn, and there's a lot of development that needs to happen, from the wallet perspective and from the Lightning node perspective in order to get there. But my idea is to have us calculate these things at least in a backwards looking way before we can make any assumptions on what the future return might be.
And additionally, there might be a new type of Lightning client that people aren't really thinking about, the large holder client. If you think about Amazon, if they were going to put $1 million into Lightning Network, they're not going to use a wallet on their phone. They're going to need some kind of an advanced wallet. Like you're saying, there's these potential malicious actors, there's security problems. They're going to need a wallet that's ready for those. So maybe there's a whole new class of application for a large lender that we just haven't even thought about yet.
Right. And if you look at what Jack Mallers just put out with his Zap wallet, he has a new desktop interface, a new iOS interface. These are the types of innovations that we're going to continue to see. We're going to continue to see Lightning, development accelerate. And I mentioned a day or two ago about how I have to keep up with two protocols now. And without a heavy computer science background, it's like it's nonstop what we have to look at in terms of all these developments, exciting improvements to Bitcoin and Lightning each.
So now your next article is called "Next Step for Node Rates," and we were talking about this idea that we could get a Lightning Network reference rate or an LNRR. And once we have the Lightning Network reference rate, you generally know how much interest you could make. You know if you want to lend out the bitcoins or not. You can start to make decisions. What kind of things are you looking for? Maybe just generally, do we need agreements from banks? Do we need agreements from governments? Is it mainly technical improvements that we need? What are the kind of barriers standing between us and this rate?
Yes, so the improvements that we need are definitely technical. They don't come from any government or anything like that. And the TLDR of this article is basically to say let's forget about the Lightning Network reference rate for now, because the reference rate is going to be an average or a synthesis of a bunch of different individual nodes rates. The point of this article is let's focus now first on how we can calculate individual nodes interest rates, and that means formulating a calculation method. What time period are we going to use? Are we going to use blocks, individual blocks? Are we going to use the number of blocks that are estimated in a year to make it similar to traditional finance? How are we going to calculate the interest? Are we going to look at each channel? Are we going to look at the node level? I think that people are more leaning towards the node level to calculate interest instead of individual channels. But you could do individual channels, right? How are we going to calculate the amount of principal that you're using in your calculation? Is it going to be the amount of Bitcoin that you have in all your channels at one specific point in time? Is it going to be an average over time? So these are all the issues that I bring up in that article, where I'm asking a bunch of questions to developers. How do you guys think that we should formulate a calculation method? Now, I would like to see at the beginning a lot of different ways, right? That way we can test and try and see what kind of methods work. But my hope is eventually that we can come to a consensus and maybe make it into a protocol, either on the Lightning layer or a separate layer, where we can all have some sort of a calculation standard that we agree upon the way that we're going to calculate rates. And then a big issue here is privacy and verifiability. So, I am starting to circle the idea, talking to Lightning developers, that it is potentially impossible to prove the rate that you say that you earned on your Lightning node, and so that will introduce a layer of trust. And so, I'm trying to think about ways around that, or how we can minimize the trust, or if we do have to trust, to have some sort of framework around that type of um, disclosure of the rate that you're making on your own node.
Yeah, I was thinking the opposite. I don't know how we can prove it, but we need to prove that everyone is getting the interest rate they're getting. But at the same time, like you're saying, that might de-anonymize them, that might cause other problems. But everybody hates trust. Nobody wants to just trust these interest producers. It just seems like a bad idea. If they write a bad rate and then someone invests their money based on the bad rate, they're going to lose money. It seems with all the digital technology and everything, we should be able to provably do it. Is there any way? I mean, could we? I hate to say this. Could we write it to a blockchain or something? I mean, could we store it in a database? Could there be a separate monitoring party that maybe could monitor these transactions? Are there any solutions, or are we just still looking for something trustless here?
We are still looking for solutions. I'm really happy to get the conversation going. I'm in the Lightning Slack, which is the LND Slack, which has been a lot of fun. I'm learning from a lot of really smart people over there, and I'm in conversations with different Lightning developers and people that are trying to innovate different sort of solutions on top of Lightning Network. And so, I'm just out there trying to learn and trying to talk to people and uh, see what we can do here.
We'd just like to thank Tony in the chat for sending us a $20 super chat donation. Thanks, Tony, for your support. And yeah, it seems like we do have some technical issues in front of us. I would like to see a provable Lightning interest rate, like you're saying, verifiable, especially if we're going to go and say, General Motors should base their stock on us, or, you should take out $1 billion loan, or, Amazon starts putting serious money into staking these coins. They're going to need an accurate rate. So I don't know the solution to that problem, but we need to continue to search for one.
Absolutely, I agree. I think the more provable and the less trusted, uh, the better.
All right. And then you had a third article today. Maybe you could just explain the basics. It says it's called Observations from Alex Bosworth's Tweet on Fees. And it seems like Andreas and Alex both have Lightning nodes, and they're both making a different amount of money from their Lightning nodes. So, what can we learn about this? What does this give us on our way towards a Lightning interest rate?
Sure. So, Alex Bosworth put out a tweet where he compared the fees earned from two different nodes, his and a man named Andreas, who has apparently one of the largest Lightning Network nodes out there. I thought that this was really interesting because I calculated it. The interesting thing is he actually posted the amount of money in his node in US dollar terms, but the fees that he made in Satoshi terms. So that was actually funny to me because it's actually uh, you know, one of the first things that we have to do is we have to agree which terms we're going to use when we're comparing. And obviously, you have to convert dollars to satoshis before you can calculate that interest rate. But separate from that, Alex Bosworth proved that he or disclosed that he made approximately 7.77 satoshis per block for a week versus Andreas making 4.17 satoshis per block for an entire week. And the interesting thing here is not the fact that Alex made about 2 times as much per block than Andreas is. It's that he actually made an interest rate 80 times, approximately 80 times what Andreas made, because he did so with so much less money. And so Alex showed that he's making about 0.4% on an annualized basis, while Andreas was only making 0.05 percent.
And what's great about this is they're both taking the risk. They both have that asset that we're talking about. It could be clawed back at any time. But this really shows that there is something to this fighting off the bad actors, having good security. Something that Alex is doing is better than whatever Andreas is doing, and it's allowing him to make more interest. I don't know of any other bank that's ever worked that way. I've never deposited my money just right, so I made more interest or something like that. This is
Right.
totally new, right?
Right, and I meant to say 0.005. So it's less by a factor of 80. And yeah, I mean the conclusion here is that Alex is doing something better than Andreas to make money. That's a very easy conclusion to make. Now, what exactly is he doing? Those might be trade secrets that Alex has, but he's also been, very open in disclosing some of the methods that he's using to maximize his income on Twitter. So I definitely suggest you go follow at Alex Bosworth to really learn about payment channel management and optimization and position in the network and having people open channels to you because he says, opening channels outwards is easy, but having them open channels to you is something difficult. So he's obviously doing something right. That's why he's making 80 times the amount in interest terms, even though he's only making twice as much. Look at the amount of money that each node started with. It's quite staggering. So, and Alex Bosworth made sure to remind Twitter that these results are not indicative of anything in the future, which I think is important to state again and again. That he just wanted to put some data out there. Does that mean that anybody can make 0.4% on a Lightning node today if they set it up? No, and odds are you won't be able to make as much as him because he obviously is exhibiting some expertise here that I'm not sure everyone else has. But everyone else is welcome to try and compete and start their own node as long as they have some Bitcoin that they can open channels with. They can compete, and so this is how a market develops, and it's pretty exciting.
Well, and I respect his honesty on that because I was going the other way. I was ready for him to start a company lending Lightning and we could all invest and we could all make lots of money, but then we'd have to trust our money with Alex and he'd have to lend it out for us. But these are really only like 2 data points in a potential sea of data points. So you're right. We really can't say that this is going to be the interest rate or it'll be anything like this. But it is exciting to start to get this data. Where could you get more data like this? Do we just need more Lightning nodes to publish, or could there be like a way they could automatically publish this or something like that?
Well, that's the point here is let's try to get to a point where we can all publish to each other in some sort of agreed upon method where we can all quickly compare, or the software can quickly calculate it for us so that we can all compare our interest rates with each other. But for now, hopefully people just post stuff out there, on Twitter and Slack, and show what they're making, and we can make some conclusions from that, and hopefully motivate others to start nodes and publishing rates and establishing some sort of system and feedback loop.
Now, to lend these Lightning, do you need to start a node? Do you need to just run the network? How much is the overhead to do this?
Well, you would have to have a Lightning node. So to have a Lightning node, you need a fully validating node beneath it. So whatever way that you can run a full node, if you can run a full node, you can run a Lightning Network node on top of it. So the overhead really is however much it costs you to run your full node. Um, and then as far as what you need, you need Bitcoin, right? You're not going to be able to attract uh, you're not going to be able to make routing fees unless you attract people to use your channels, and people are not going to use your channels if you don't have enough Bitcoin capacity for them to send through, because the amount of Bitcoin you have in your channel has to exceed the amount of Bitcoin that passes through your channel. So if you open a bunch of channels with 5 Satoshis in them each, it's unlikely people are going to use your channels. But if you have a bunch of channels open with a large amount of Bitcoin in each of them, you're more likely to make money. So their barrier really is only the software that you need to run and the Bitcoin that you need to stake.
And just to, again, to hit home the economic differences between the Bitcoin system and the current system, people are still trying to compare this to a central bank. A central bank oftentimes can print their own money. The reasons that the libertarians call the US currency fiat is because it can just be printed act. They say, print a bunch of bills. We need to buy some bombers. They print a bunch of bills. They buy some bombers. That's it. The word fiat means let it be done. So it's an act of Congress. So the word creates the money. With both Bitcoin and the Lightning Network, even if you're Amazon, even if you're a core developer, even if you're Satoshi or whatever, you can't create any more money out of nothing. So this is totally different than the old system, right?
That's right.
And we also have this thing where I've been talking about how in the current system, yeah, you can print the money for weapons and war, and it's bad, and you won't be able to do that under the Bitcoin system. But you also won't be able to produce disaster relief or road funding or build a new dam money or whatever it is. Money and everything is really going to change. You actually have to have the money to pay for the bill. You can't just do this deficit spending, these credit cards. Just like you're saying, if you set up Lightning channels, even if you got the best name in the business, if you don't have money in your accounts, actual money there, no one can use your Lightning system. So it's a wholly new kind of bank where the reserves have to be there for the system to work.
That's correct. It Lightning is a fully reserved system.
And that's why there's been so many people trying to say that it's a new currency or something, or it's not related to Bitcoin, or that they've given up on Bitcoin. These all seem to be FUD. It really is a linked currency system. It's something that exists to represent something else. It's a programming concept, so I can see why a lot of people aren't getting it. It's a pointer, but if you haven't studied that, it's not going to come up for you.
That's right.
So I think we've run through most of my questions. I'll see if there's any questions in the chat if you guys want to ask them right away. Otherwise, Nick, is there anything else that you'd like to talk about that you think we missed, or something you see happening in the future? Something like that.
I'm really excited about what has been happening so far, the feedback that I've gotten from Twitter and people reading my blog on Medium. So I appreciate all the feedback. Keep it coming. Keep the ideas coming. You can follow me at time value of BTC on Twitter, same handle on Medium. And I really am enjoying being in the Bitcoin community and discussing these ideas with people, and hopefully we can keep it going in an open source and transparent sort of way.
Well, that's what I think is great about the Bitcoin community. Whether you're a young kid just studying computer science, or if you have finance degrees and you're from the economics world, you can come together and talk about these ideas. And your idea is just as valid because we're all thinking this out, and we all haven't thought of this or we haven't thought of that. And when they were discussing segregated witness, I think Luke Dash Jr. casually mentioned offhand that they could do it as a soft fork.
Soft fork,
And
right?
this idea penetrated the whole community, and all these other people, their heads just flipped on, and they're like, "Oh my God, we could do it as a soft fork." And until he just put that out there, nobody knew of it. So we never know where that genius is going to come from, and we want everyone to participate. So I think it's a really exciting space.
Yeah, and I'm happy to be here. I'm happy to be part of it.
All right, looks like we've got a couple of questions. They might not be directly related to this, but we'll try to help them too. Emma asks, "Is the Lightning Network a different ledger? Will her wallet show two different balances in the future?
I believe that the Lightning Network wallets that are showing up now, that have both Bitcoin and Lightning capabilities on them, are showing different balances. Um, and as far as, is it a different ledger? Technically, no, because you everything can settle back to the base ledger, but you do have a ledger with each channel that you have kind of at all times. So I guess the answer is probably yes and no there. Sorry to not be more specific.
It's kinda like using your Starbucks card, and you wanna put a little bit of money on your Starbucks card so you can always buy coffee, but you don't wanna put your life savings on your Starbucks card.
Right.
So you'd have a bunch of little Starbucks cards for buying coffee or buying stuff at Amazon or something like that, and you'd use that to send around your small payments. So yeah, it's gonna take some getting used to. It's gonna look different in your wallet.
Yep.
Uh They've also got another question. This is just kind of a classic Bitcoin question. So, if there was a crisis and there's no power, how would Bitcoin work? And if you can't handle this one, I'll give it a try.
Sure. Go ahead.
All right. So if there's no power, there's still going to be some people with generators or bicycle powered generators. They might be able to run their version of the blockchain. If we still have the satellites in space, we might be able to link and synchronize the blockchain, at least download new data. Broadcasting to it's going to be a big problem. But as with all of these end of the world situations, if we've lost the internet, if we've lost power, Bitcoin's not going to be your number one concern. You're going to shrug it off. Everyone's going to be doing the new kind of trading, which is miniature bottles of whiskey and toilet paper. Very portable, very splittable. And the great thing about the little bottles of whiskey is they don't expose your whole supply. Unlike Bitcoin, I can't just follow that transaction chain back to your wallet and see how much whiskey you're sitting on.
That's
So
right.
yeah, if we're in the apocalypse, we're in the apocalypse. I'm not going to worry about, oh, how am I going to get my Netflix? Well, Netflix is doomed in the apocalypse too, but that's not a reason to sell their stock. So,
That's right.
all right. So that was a good question. Let's see what else we've got. So yeah, back to the lightning thing. Yeah, it's really kind of like you would put your money in your Starbucks card and then you don't have your money in Bitcoin. So if you want to buy a Lambo in Bitcoin, you might have to cancel your Starbucks card, bring that money back to Bitcoin,
And
marshal your forces.
And here's the way I actually think about it. I think that the difference between Bitcoin and Lightning is settled versus unsettled. So the settled Bitcoin is yours and it's in your wallet and it's not held in any sort of time lock. But your Lightning Bitcoin is unsettled because that state hasn't been broadcasted yet to the blockchain. So you can at any time broadcast and that Bitcoin becomes settled rather than unsettled. But that's kind of the way that I'm thinking about it in financial terms. I think it makes sense to me.
All right. And I think we found a good comment to end on. Maximal Liberty says, at that time, one USD will be more valuable than a square of toilet paper because a dollar bill can be washed and used again because it's made of cotton. So I think using the dollar bill of toilet paper might be a good point to end on. I just wanted to show the QR code so you can support this show. If you've got some extra Bitcoin or any of these altcoins that the Trezor accepts, you can donate now. I also wanted to highlight my friend DJ Booth's project Tallycoin at tallyco.in. And this is beta software, it's under development. But basically, what you do is you bring your own Bitcoin address. You set your fundraising amount, like if you want to raise $100, and you set when you want to raise it by, and that will create your own tally coin right here. Here's mine. I'm trying to raise $100 to buy a vintage typewriter that I don't really need, that Tom Hanks recommended that I buy in a documentary about typewriters. So as you can see right here, if you donate Bitcoin, the amount will go up on this thermometer, and this will show how many Bitcoins we've received today, and that'll change day to day. And anyone can use this for any kind of fundraising. It doesn't control your keys, it doesn't control your money, nothing like that. If you want to support this website, you can donate to Tallycoin. I think he's going to run a Tallycoin for Tallycoin. So it's a pretty cool idea. Check out Tallycoin and you could donate to us there. Nick, one more time, where can the people follow you on Twitter? What's your website?
It's at time value of BTC.
All right. Well, thanks so much for joining us, Nick, and be sure to let us know when you've written a new article, and we can talk about how this is moving forward. I hope we've assuage some of the people in the chat who are worried about us becoming a central bank or getting in league with the bankers. I know it's a bummer we have to use their jargon and their semantics, but like Nick is saying, if we can establish this interest rate and we can establish this low risk asset, we can start building things on top of it. And if we're going to take over the financial economy, we're going to pretty much have to build a mirror of it on our side to fill all of the needs it's currently filling. And this seems like part of that. So I
That's
think
right.
it's something we're gonna have to do.
And thank you so much for having me. I appreciate it, and can't wait to come on again.
Thanks so much. And until next time, which will probably be tomorrow morning, bye bye.
Hi, good morning. It's Trading Bitcoin. Tone had me go very quickly and live, so you're having a little fun here. Both dogs are here, so that's going to be a lot of fun as well. First of all, we may get a surprise appearance from Adolfo. Second of all, Chinese rankings came out today. Tone, is Bitcoin #1 finally?
Oh yeah, for sure. Yeah, so we weren't gonna do like our normal trading show. No, we weren't gonna do our normal news show. Oh, by the way, I got a haircut, and like I promised, I promised I wasn't gonna wear a hat. Now that I got the haircut, but in yesterday's show of the live the hearings, I had a hat in the thumbnail, so I wanted to match my.
Good morning. Good morning, Bitcoin, and welcome to Bitcoin Talk Show. Today is Wednesday, June 27th, 2018. My name is Thomas Hunt, and here's what's happening today in Bitcoin. The price of Bitcoin was down 0.02% in the last 24 hours, with a last of 6,131, a high of 6,157, and a low of 6,116. But that's not the reason we're here today. The reason we're here today is to talk about Nick Bhatia's new article, The Time Value of Bitcoin. Will you be able to make interest from the Lightning Network? Sounds interesting. How's it going, Nick? Welcome to the show.
Great. Thanks for having me. I appreciate it.
So I just wanted to open this up here. So you say basically the Lightning Network, we've talked about it before. People are worried about the hub and spoke model. They're worried that an Amazon could come in and become kind of a Bitcoin bank. But you have a different idea about it. You think that this hub and spoke, the amount of time that it takes to hold your Lightning payments, could actually become interest and become a positive thing for Bitcoin. What are the basics behind this idea?
Sure. So cold storage Bitcoin has no interest. It has no interest potential. If you have your private keys stored in a cold storage manner, you are not going to gain anything from that. 1 Bitcoin equals 1 Bitcoin. If you have Bitcoin in Lightning Network payment channels, you can potentially make routing fees. And in in an interest rate calculation, if you have principal, which is your amount of Bitcoin that you have in your payment channel, you have some routing fees, is your interest, and you have the block time or the time that it takes to do so, you can come up with an interest rate. That's basically my idea here. It's nothing too complicated. I'm not trying to reinvent the wheel. I'm basically saying that in the Lightning Network, the variables that you need to calculate an interest rate are already there. So can wallet implementations, create some sort of calculation method so that we can compare payment channels to other payment channels and see who's managing it well, who has good routing techniques, and who can separate themselves as far as making money, making Bitcoin as a Lightning Network node. I think it's also important to separate the interest that you can make lending Bitcoin on an exchange. I got some replies to some tweets over the last few days about making interest on Bitcoin that you have on an exchange. Well, Bitcoin that you have on an exchange is not necessarily your Bitcoin. You have a claim on it, but the exchange is the one with the private key. And so them lending your Bitcoin is a trusted third-party transaction. There's an extreme amount of counterparty risk because if that exchange goes under, your Bitcoin are gone. And so you should make more interest than you could on a Lightning Network per se, because in Lightning Network, your fees that you're making are part of Bitcoin transactions that are your private keys. So we have three types of situations here: cold storage Bitcoin, no interest; Lightning Network Bitcoin, you can potentially make some interest with no counterparty risk because Lightning Network uses the base protocol as its security. And then you have an exchange situation, which is a trusted third party, counterparty risk. You can make interest on that, but it's not the type of interest rates that I'm trying to build.
All right, so let's go back to the basics of this here. So if I have the Lightning Network and I have some Bitcoin, let's say I was to transfer $40 up to the Lightning Network. Now I've got $40 in Lightning. I'm going to send that out, various fees, doing routing. And what you're saying is because the money's already locked there, I'm already getting something that's similar to interest. I receive routing fees, the more Lightning Network that I'm able to route around, that you could then work backwards from these numbers and create an interest rate so that before I put my money on Lightning Network, I would kind of know how much money I'm going to get back from participating in the Lightning system.
Exactly. And I don't know how this will unfold. I think that as the Lightning Network grows, we'll get a sense of how routing fees work, how much people are actually making. We'll have, I think from a programming standpoint, we'll have some challenge hashing these types of data points to actually cryptographically prove that we're making this money. I think that's definitely one of the hurdles that I foresee. That's why I wrote the articles. I want to get feedback from programmers and how can we make some of this these calculations in the Lightning Network using the data that's there. So yeah, in your example, you send $40 to your payment channel, and you have a sense based off of past data from either you or other people on the Lightning Network, how much they're making in routing fees. And you can have an expected return on your investment. Now, expected return and the realized return will, likely be different. But through time, I think that the market can develop and it'll start to be more predictable using the data as more data enters the system.
Would something like this cause a problem with the Lightning Network? Is it possible that it would centralize the Lightning Network? If someone like JP Morgan Chase came in and put down $1 million into Lightning and became the best routers in the network, would they get all the interest?
I guess in a free market, anything is possible, right? We don't know if an investment bank will come in, plop down $1 million, and also happen to be excellent at their payment channel management and their routing, fees that they're advertising, and undercut every single other node in the system. Then they could potentially form a monopoly. I do see that as a slight possibility. Really, we don't know how it's going to work. I do anticipate that because there are no barriers to entry. Basically, all you need is a fully validating node and a Lightning Network node, and you need the appropriate software and you need the appropriate capital. Anybody can enter, and anybody can charge fees as low as they want. So, hopefully competition will exist, and certain Lightning Network node operators will offer services that other people are interested in and other people are not. Again, the possibilities are endless. It could be a monopoly. It could be very decentralized. We'll just have to wait and see.
So you're saying that a market could develop for these fees and that maybe someone could come in and undercut someone else. Maybe someone else has a censorship issue. They won't let certain transactions through. They have a blacklist. Maybe you want to pay to get the uncensored transactions. All of these things could be expressed through this interest rate.
That's right. It's a market. When you send a payment on Lightning, unless your wallet is doing everything for you, and the wallets are being developed, but they're not necessarily um, fully production ready. I know that a couple are starting, but we are still in the early days of the Lightning Network. We might see different node operators offering different services or some censoring transactions, and so you'd have to go elsewhere. And really, you can determine the path, the multi-hop path that you want to use based off of the fees that other nodes are charging to route your payments.
So where would this money come from? Because I know that Bitcoin's locked at 21 million units, so we can't print any more Bitcoin to pay people interest on their Bitcoin. Where would they get this interest?
So of course, Bitcoin is a zero-sum game. There will only be 21 million Bitcoin. So at any given time, the people that are making money from Lightning Network routing fees are going to be making the money from people using the Lightning Network. And so there will be in the Lightning Network people using payments and paying fees to send payments. And there will be others that route payments and collect those fees. So in the Lightning Network, there will be consumers and there will be suppliers. And what I'm talking about is the supplier side. We want to see the suppliers of capital, how much that they can make in routing fees. We'll also hopefully get data on the consumer side, people that are consuming the capital, they're consuming each payment channel for that short amount of time as the Bitcoin passes through. We'll see how much, I guess, negative interest that they will earn on the money that they're spending. But yes, it will be zero sum. You'll have those making money and those that are spending it.
So if there's more use of the Lightning Network, there's more interest. So if there's more interest, there's more chance we'd attract a bank or a larger lender to play in this game.
Right. So I think that there are a couple problems with the Lightning Network from a security standpoint. The first and most important is you cannot have Bitcoin in Lightning Network payment channels currently and have them in cold storage at the same time, right? And so going from cold storage to hot storage in the Lightning Network is a risk for the holder of that Bitcoin, and that risk should be compensated with some reward. So you're risking your security of your Bitcoin to stake it to payment channels. You should earn some fees for that, and that interest is what I hope that Lightning Network wallet providers will help calculate. And I don't know if different wallet providers will come up with their own solutions, or if there'll be a consensus at the Bolt level, on the Lightning Network code base. We'll just have to wait and see. I want to just start the conversation and explain to people that if we can calculate the interest that you can gain on Lightning Network payment channels, we can use that as a benchmark. And we can get into that a little bit later on why a benchmark rate is so important for Bitcoin.
So basically what you're asking the wallet creators to do is to maybe add an extra line that would calculate this interest. So before I'm about to put my $20 or whatever into Lightning, it would say you might make $22 in 6 months, or you might make $30 or whatever it is. By giving them this information, the goal would be more people lending on Lightning. Like, is this a thing that Lightning needs? Do they need more lenders to keep the network going?
I'm not sure if they need more lenders, but it comes down to opportunity cost of capital. If you want to have Bitcoin in a Lightning Network channel and make money off of it, you should have some expectation on your return. If your expectation is that you won't make any money and that you'll lose money potentially, you won't make that investment. And people won't be staking Bitcoin to Lightning Network payment channels because their expected return is negative. Well, if their expected return is positive, then they might do so. So it's really a way to just measure, should we do this or should we not? For example, if you if you wanted to lend $40 to somebody on the street in Bitcoin terms, and you meet him on the street and you transfer a fraction of a Bitcoin to his wallet, and you say, pay me back in a week, and pay me back 2% interest. And he walks away and you walk away. You getting that money back from him requires, it requires counterparty risk, right? He just left. There's no cryptography that's going to get your money back. You have to find him and get your money back, right? So if you can get 2% in that situation to a guy on the street, and you can get 1% in a Lightning Network payment channel, and you know that the Lightning Network payment channel has this cryptography and Bitcoin's base layer blockchain to secure your money, then you have a decision to make. Lend it to the guy at 2% on the street, or put it in a more secure setting in the Lightning Network. That's a decision that you'll have to make. And you'll say, oh, I trust this guy, I'll lend it to him at 2%, or I don't trust him, I'd rather just put it in a payment channel at 1%. And that measurement is what Bitcoin needs. We need to just measure. I don't know if the rates will be 1%, 100%. I have no idea. I just want to explain to people that if we can measure it, we can start to build more financialization on top of Bitcoin.
Now here's what I like about this system is they don't let you take the money out of the Lightning Network. I used to work for a Bitcoin loan company, and they're not around anymore, but I still don't want to mention their name. But we had an incredible problem with fraud. On our end, we were doing everything we could to verify the identities of these people, to link to their Facebook accounts, to just anything we could do to verify that these were real people. But even then, your boss could be using your identity to get a loan. And that's very hard to disprove, even if you have them hold up the selfie with the license, that kind of thing. With this kind of system, like you're saying, our options are, when getting interest or getting money back for our Bitcoin, number one, loan it to a random person. Like you're saying, they might not bring it back. We might not ever see them again. And if you used a website like I used to work for, you might have lost all your money. I certainly did on a couple of those loans. And that's all of it. I didn't get $1 back. And that was part of the problems with that website, is we didn't have any kind of insurance or any kind of debt collection that would go out and get you that 30 cents on the dollar. So you get some kind of return. We had nothing. So that's a bad way to lend. The other way to lend, like you're saying, is to put it in an exchange. Now, this is slightly improved over the Bitcoin loan website because we actually let people take the Bitcoin out of there. At least these exchanges, generally these days, when you lend on an exchange, you're lending someone for liquidity. They're going to use it to trade on the exchange. If they win, they get to keep the money. If they lose, they have to pay it back immediately. It's a call. The money doesn't go out of their account. It's automatically pulled back. And what you're saying is, to add to this, we could add a third way where you could lend money on the Lightning Network, but you're not really lending it because it's linked in your account, and you're only really lending it to the network. And then it's just being used to send around little bits of Bitcoin, and you'll get transaction fees back. So this would be a wholly new way to make money with your Bitcoin, kind of a halfway in between cold storage, it's totally safe. On an exchange, it's relatively safe. Give it to a person directly, it's gone. But here, it's on the Lightning Network. So you do have a cryptographic peg to it, right?
Exactly. And that's what the hashed time-locked contract provides us with. It's a way to make sure that that Bitcoin is ours under any circumstance. As long as you have the correct payment channel management, and you broadcast the anti-cheat transaction that you're allowed to broadcast if somebody tries to steal your Bitcoin. As long as you have that power, the Bitcoin is still yours. Those are your private keys. And so the reason why this is so important is because in traditional finance, we have something called benchmark rates or reference rates, or the risk-free yields. Now, on the US dollar, we have the US Treasury curve. This is considered the risk-free asset in finance. Now, the US government could or could not default at any time, right? It's unlikely, and that's why US Treasuries are considered the risk-free asset. It's not necessarily risk-free, it's just the lowest risk asset, right? So we need that type of lowest risk asset equivalent in Bitcoin so that we can build rates on top of it. So, for example, if the World Crypto Network decides to go public and issue bonds to improve your studios. Let's say you want to borrow $10 million from the market and redo all your studios. You're going to go out into the bond market and you are going to borrow money. Now, how does somebody decide how risky or not the World Crypto Network is? They look at the US Treasury curve and they say, okay, if I lend money to the US Treasury for 10 years, they'll pay me back 3%. So I know the World Crypto Network should give me more than 3%. So, corporations borrow from the market referring to the US Treasury curve, right? They say, I will borrow from you and I'll pay you 1% more than the Treasury will, or I'll pay you 2% more than the Treasury will. Well, you need the Treasury curve to give you that reference rate. And so if Lightning Network can have a reference rate, which is the lowest risk possible way of earning Bitcoin, then you have a rate on top of which we can build, a whole debt capital market and people can borrow. Again, going back to my example of somebody on the street versus.
This is a really exciting interview with Nick Bhatia. Thanks so much for listening and watching on the World Crypto Network. We're about to go live again on the Skype chat. We will play the rest of this interview with Nick Bhatia. Also, you can watch this interview anytime on the World Crypto Network. But we are back live after listening to Andy and Adam, who were live on WCN2, I would call it. It's really neat what YouTube does these days. They let content producers like the World Crypto Network have two different channels. We were broadcasting on this channel live. I did my news update, and then I started playing last night's interview with Nick, followed by the couple weeks ago interview with Nick. And at the same time, you could also watch Adam and Andy on the other channel. This is really exciting to me. It's well beyond the vision that I've always had for World Crypto Network, which is, of course, 24/7, 365 people talking about Bitcoin. And, if we can talk about the altcoins too, that's fine. But just this whole idea of cryptocurrency and cryptography and everything that we're about to do together on the internet, if we had a place to talk about it, that was the idea. And I've worked with a lot of different great people over the years. And one of my ideas recently is to go back and interview them all. It would be super fun to hear from everybody again and see what they're up to. But I also want to talk to you guys about what Andy and Adam were talking about, which seemed to be Bitcoin as a platform. And I just Googled the word platform. The definition of a platform is a raised level surface on which people or things can stand. It's also the declared policy of a political party or group. But we really do see a trend in new coins these days. I was talking with some guys in the chat just a couple of minutes ago, and we both pretty much agreed that all of the new coins are platforms. Ethereum has become a platform. EOS is a platform. Stellar is a platform. I'm sure there's more that I'm leaving out, but I think what Adam and Andy were talking about with their idea of the crypto dividends is Bitcoin as a platform. And this idea that in a way, these hard forks or these crypto dividends or whatever you're going to call them, Bitcoin forks, like B Cash, like B Rhodium, like B Gold, B Diamond, B whatever, like all these things, that airdrops are in a way making Bitcoin into a platform. And what do you guys think about that? People in the chat said platform coins were going to be the hip new thing in 2018, 2019. What do you think is going to be the hip new thing? Is it going to be Lightning Network and getting interest? Although the interest is very small. I think you'd need millions of dollars to really capitalize on this interest. But obviously, if we want to play the big financial game, if we want to get the big boys into this, we're going to have something where you could get rewarded for having $1 million and that you wouldn't have to take any risk. How clever is that? First of all, you have to be clever enough to have $1 million. Then you have to have a way to put it into Lightning and to protect it and to secure it and all those things. Then you have to offer a superior quality of Lightning transactions. We barely know what that is, but you would be defining it. That's how much of the frontier that we're on. We really are out there in the technology, in the Bitcoin. But you can give us a thumbs up in a chat now. Or you can call us on Skype at World Crypto Network, all one word. We're going to try to keep this show open till at least 10 o'clock here on the West Coast. or wherever I am. There's no coast here. I'm far from the water. There's no beach, but I could sell you some beachfront property if you're interested. Not seeing a lot of activity in the chat. Just wanted to talk a little bit about platforms and shout out to Adam and Andy. You can watch Andy Hoffman's interview with Adam Meister on the One-on-One show here on the World Crypto Network. Just subscribe down below. And if there are no calls, we might just go back to the video and watch the rest of part 1 of my interview with Nick Bhatia. We talked about the Lightning Network reference rate and the idea that you could make money on Lightning. Also, they say in the chat that Facebook stock is getting wrecked. I would agree with that. I was just Googling that. Facebook plunges more than 24% on revenue miss. And it probably says privacy concerns, stuff like that. I really kind of agree with this guy here already. The Facebook stock crash is nothing than a long-term hiccup. Facebook is going to keep going. You want to hear me read from my book? Part of that is that I lost my place. I'm reading the book for the audiobook, and then I'm reading the book for the out loud here, and then I lost track of where I am. So I don't know where to start from again. And then the other thing is that I'm trying to edit the book. So I actually had some other people read it, and they suggested I fix a whole bunch of my grammar and the way that I capitalize things and stuff like that. So I'm conforming to the English literature standard and making edits and changes to my book. I'm not an absolutist. That comma is the comma that I die upon. No, I don't care about that comma. But no, I need to get my book fixed and get back on track with that project. But yeah, I have fallen behind on that. Thank you for noticing, though. I think that's cool. But yeah, Facebook stock is down. What do you guys think about that? We could talk about Facebook stock. I don't know. I got the early Facebook stock a little bit, and I've held it, and not as good an investment as Bitcoin. Could have easily had more in Bitcoin, but that's part of the hedge, right? You want to have some risky investments like Bitcoin or the crazy altcoins, and you want to have some safe investments like good old stocks or bonds or even having fiat or real estate. That's a good thing, especially if you can have real estate you can live in. Then you don't have to pay rent or you're paying rent to yourself. So that's always good. Hire an editor. Yeah, well, I mean, currently, I mean, I'm fortunate enough, thanks to the power of the internet, that a couple of people that you might even know from the chat or from Twitter have volunteered to read and edit my book. And while they're not professional editors, the main thing I felt I needed was a second pair of eyes. I've read it a couple of times, but the kind of mistakes that I make are the kind of mistakes that I don't even see. So I just gloss over them. And if I'm going to press it down into print, it's kind of like making a physical thing. And I know there's going to be a typo and there's going to be some errors, but I'd like there to be less errors. And I kind of get that feeling that I think the programmers must feel when they're about to open source their code. And they're like, oh, did I comment everything? Does my code make sense? Am I going to look like a jackass? And I have code somewhere. I should probably open source it. But I would probably feel all those things. But my code's pretty linear. The problems that I was solving weren't very complex. But still, the beauty of computer programming and writing books and writing a screenplay or a movie or anything like this, you're expressing yourself in these forms, and you're using these forms to express or to solve the problem that you have. And computer programming, I would say, is just another form. You write your pseudocode. That's like your prose. That's your plan. And then you have to structure it into poetry. Imagine if you were writing a sonnet, something with a severe line structure, and it has to be perfect. And the great thing about computer code is that, if you screw up with a semicolon here or there, then the whole thing fails. Unfortunately, the English language isn't so precise, but the computer certainly is. And I just enjoyed that article from a week or so ago where they said this entire video game performed poorly and was a lesser game. It was like a aliens game against the Space Marines or something. And the aliens were poor running because one programmer spelled the word tether tether, and one programmer spelled the word tether. It was pretty great. Excuse me. They're saying in the chat I could publish my book on BCH. I could fit the entire book into 32 megabytes. That seems pretty true. But how long would it last? And they're mentioning the Tally campaign. It did go very well. I think DJ Booth's are making some fixes to the code here, and we have the goal reached. You can see the sunshine, and you can see the countdown. We made it, and you can even see all the people that donated. So we did have a very successful first Tally coin campaign. Our goal was pretty small though, at $100. I'm pretty sure the next goal is going to be larger, probably in the trip to Europe type thing. But I'm super excited for Tallycoin. It's a simple idea that I had that I gave to DJ Booth and I gave to my roommate years ago, and I've been trying to get it written. I kind of wanted to starting to get to the point where Mad Bitcoin should have a little like program section, because in a way I've helped influence these programs by talking about them. And yes, I can write some basic code and I kind of understand how code works. But someone else wrote these programs, both ProTip and Tallycoin, and I think they're great. And they totally they kick butt, and they're open. They're well, they might be open source. This one's definitely open source. Tallycoin might be open source, but it's really kind of it has some commercial potential here. If he makes a website where you could see all of the other tallies that are running, and you could see, and then you could donate to them, and people could tell their story. And again, the beauty of this idea and this website is that Tallycoin only monitors your Bitcoin address. All this is really doing is checking in with a web page like BlockCypher or blockchain.info and seeing how many people have donated Bitcoin to this address. And obviously, it starts out at 0. And if you're fortunate, you can manage to raise $100 and get an amazing typewriter that doesn't have a lot of purpose. But look at those green lines. What an interesting choice. Green keys. But yeah, and Tallycoin worked for me already. So I think it's super cool, and it's really simple. You bring your own Bitcoin address. The same thing for ProTip. ProTip is a great idea, maybe a little before its time, but it scans the website that you visit for Bitcoin addresses. Then, based upon your allowance, it donates a certain amount of Bitcoin, like $10 a week, to your top 10 people, and it would give them each $1. And it's really amazing. And we all worked on it together, everyone promoting it and spreading the word about ProTip. So it's very cool. So check out ProTip, check out Tallycoin, and it seems they're just not hitting the phone calls today. So we're going to go back to Nick Bhatia and part 1 of our interview here on the World Crypto Network. Thanks so much for watching. Be sure to give us a thumbs up and a share down below. Bye bye.
Is somebody in the Lightning Network, you're going to look at your Lightning Network rate as your opportunity cost of capital. And you'll only lend to that guy on the street if he pays you more relative to that reference rate. So that's really what I'm going for here, is to try to explain to people that if we can get a reference rate yield curve on Lightning Network, it really could be beneficial in just real world lending and borrowing of Bitcoin.
So what about the negative comments in the chat? They're worried that what we're doing now is we're recreating the banking system on Lightning. There was a lot of fear before that Lightning would be a centralized hub and spoke model, and that someone big, Amazon or JP Morgan or whatever, would come in, get all the fees, maybe even be able to track everyone. Is this going to bring the wrong element to Bitcoin, or is it just some of the old language from banking is just rubbing off?
I think part of Bitcoin is that it is a decentralized solution to money, right? And so part of the ethos of Bitcoin is this finite money supply. It's the fact that you can get within half an hour money confirmed sent anywhere in the world without using any third party. That is the foundation of Bitcoin. And I understand the fear of banks getting involved, but I think that Bitcoin is a new asset. Lightning Network is a new technology, and let's allow a market to develop here. We're all using the same software. It's a consensus protocol, right? Let's let it develop. Based on what I understand about the Lightning Network, it's using the same cryptography that we trust Bitcoin with. And you can't steal money from somebody else in the Lightning Network because they have the right to publish or broadcast an anti-cheat transaction. So let's see how it develops. Let's see if an Amazon does come in and they want to put $1 million into Lightning Network payment channels and collect a bunch of fees. Well, somebody can come in and charge less than they can, right? There's no barrier to entry. You just need the software and a little bit of Bitcoin.
So
The answer to your question is I don't know if this will cause the big bad banks to come in and dominate the industry, or if it'll be pretty decentralized with thousands or hundreds of thousands of people routing Bitcoin.
Well, it sounds like these routing fees are going to happen anyway. All you're saying is we could extrapolate a formula from that, get some kind of a reference number, and at least you'd have some kind of idea that you could make money or you could make interest on the Lightning Network. Now, you
Right,
mentioned
exactly.
lending. Is there a way to tie more traditional lending into this, or is it just lending for the fees, that kind of thing?
You're talking about in the payment channels itself?
Mm-hmm.
Well, I think that in the payment channels itself, all you're doing is you're providing the capital for the money to flow through. I think that's the purpose of a multi-hop transaction. It's to find a path to your destination. And in the Lightning Network white paper, the authors mentioned that the time value is basically you being compensated for a short-term leasing of that Bitcoin. You're basically lending that money into the market for a fraction of a second, and that's it. And so other lending, I believe, the stuff that's going to reference the Lightning Network reference rate potentially, it's going to happen off chain. It's going to happen off the Lightning Network, and it's going to happen, I think, more in a traditional sense where you actually have genuine counterparty risk. None of this stuff is going to be guaranteed by the blockchain, but we need that. We need that in the world. You can't just have people borrowing and lending in a cryptographically secure way all the time. There needs to be off-chain activity, but as long as the people know that Bitcoin that you're lending is not your Bitcoin anymore because it's left your private key, it's left your wallet, it's gone. And for that person to pay you back, it's genuine counterparty risk. That's the real world. Lightning Network is going to be cryptographically secure. So the opportunity cost between, cryptographically secure and real world Bitcoin has left your private keys is something that I think that we should try to calculate.
So I had an idea. It might be possible for another business to lend you money to then invest into the Lightning Network to then get the interest. Would the interest be a regular thing, like I always get $1 a week, or would it be more random where some weeks I could get $5 or $7? So maybe there's a reason for me to buy in or not to buy in. Would it be more variable or more standard?
I think it'll be variable. Now, to the degree, I'm not sure, right? Again, it's brand new, so we really don't know. But yes, if the network is busy, let's say around holiday season, and people are, there's great merchant adoption, and people are using Lightning Network to do all their holiday shopping, the network will be busier, and you might be able to make more fees versus, in the middle of the night, in the Western Hemisphere, on a non-busy time, it might not be as busy. You might not be able to make as much money. So yeah, I do believe that it will vary, and we'll have to see how that unfolds.
All right, so let's look at the good sides of this and then the potential bad sides to this. So the good side is that we need more people on the Lightning Network putting their money out there so that it can be routed around. So presumably this would attract either larger players or just normal players who can now get some interest, and it would inform them of the possibilities of not even really lending, but like temporarily lending, like you're saying. It's not even really out of your control. It's kind of in your control, but it's certainly not as bad as putting it on an exchange or just giving it to someone in person. So, would that be a good thing for Lightning, that it'll attract more nodes?
Yeah, absolutely. And again, like you said, it's a very short term leasing or lending, but it has a finite nature to it because of the time lock, right? There's a block time countdown on your hash time lock contract, where at a certain point, uh, that money will come back to you, and so that there's a potential end to the contract, and you might not get your Bitcoin back at the exact time that you expected it, but the maximum time that it'll take to come back to you. So hopefully this will bring more money into the Lightning Network, more nodes, and more people just trying to measure the opportunity cost of capital.
And then as far as downsides, the only potential that I would see is that idea we talked about earlier about the jargon and the banks, and just kind of an uninformed argument that now, because you're paying interest, you somehow broken Bitcoin and it's not custodial anymore. Somehow it's all messed up. Or maybe that someone is quoted a fee like 1% and they only get 0.5%, and now they're upset and they're looking for someone to sue. And there's not
Right.
really anyone to sue, but these are, I mean, I don't think, can you think of any other potential downsides here? I mean, essentially, you're just saying, calculate this formula, try to find out what this interest rate is. The fees and everything's going to happen anyway. So,
Right. I mean, this is already happening on the Lightning Network. It's just that, can we measure it, and can we publish it? So maybe downsides. I think I do have some concerns in terms of privacy. Now, if you want to run a Lightning Network node and you want to earn fees and interest, and you don't want to tell anybody or show anybody how much you are making on the Lightning Network, it's your right to do so, right? I'm not exactly sure how the privacy on Lightning Network exactly functions, but I would hope that if you don't want to publish that information, you don't have to. Now, if you do, and you do publish it, that does reduce your privacy. But if you think about the way that banks work, or the way that borrowers work in the real world, you have to have a credit rating, right? Corporations have credit ratings, individuals have FICO scores. You have to prove that you are credit worthy as an individual or as a corporation through time and through paying back previous loans. And so there's both sides, right? There's the people that want to be private, and there's the people that don't want to be private because you want to show the network, look, I have the ability to earn interest on Lightning Network because I'm good at payment channel management. I have sufficient capital. I have good security practices because the way I've set up my Lightning Network node and the way I have the redundancy set up, I know that my Bitcoin is as secure as I can get it. We want to see those types of entities form as well. So yeah, I do see some privacy downside, but again, it should be your choice. If you don't want to publish that information, you shouldn't have to. And one more thing I'd like to note is I'm not a programmer. I don't have any computer science background, and I've just done my best to learn about the computer science of Bitcoin over the last couple of years. And so I really don't know how these types of calculations can be done from a wallet's perspective. And my goal is to start this conversation and to hear from developers that are interested in this. Can this be done? How can we do it? What's the best way to calculate it? Should we use calculations on the payment channel level, on the node level, on the individual HTLC level? What is the time that we use? Are we going to use one block at a time to measure it? Are we going to use, X number of blocks at a time? Are we going to use the number of blocks in the HTLC itself? These are all questions that I'm asking, and I hope to get some answers. from developers.
All right, looks like we have a couple of questions from the chat. If you'd like to ask your question, please ask it right now in the chat. We'll try to get to it if we have time. The first one is, does anyone with open Lightning channels choose their interest rates?
Well, you choose the amount of Satoshis that you want to charge to route through you. So in essence, you are choosing the interest rate that you can earn, but you don't know if people are going to use your channel. So the answer to that question is yes and no.
All right, and then the other one looks like a more technical question, but they're talking about the separate iterations of Lightning Network. I think MIT's working on one, the Lightning Labs people are working on one. I think they're interoperable. I think they work together, but I don't think that would affect the interest here. So I don't know if you have any more information on that.
Yeah, my understanding is that the three entities that have their implementations all use the Bolt protocol, and so that is interoperable. And again, the implementations or even the wallet providers who the team in France has their own wallet, but like Jack Mahler's at Zap, he's using one of the implementations, but he's not necessarily associated with them. So these guys can all come up with different ways to calculate it. I think it would be best if over time we come up with a consensus on the best way to calculate interest so that we can compare to each other. But I do anticipate people trying different ways at the beginning and saying, hey, look at the way I came up with calculating interest. And then, Lightning Labs does the same and Blockstream does the same. And they all compare. And then through an open source type of discussion, through time, maybe we can come through to some consensus. And I do think that that is the best path forward, is a consensus on how to calculate it. But I quickly abandoned the idea of trying to dictate how this thing should be calculated early in my writing several months ago. I with the great feedback from some of my colleagues, they were like, why are you trying to dictate how much block time we should use to measure this interest rate, or should we be measuring it with or without the on-chain fees that you have to pay to open and close these channels? Who am I to dictate that? Let's let the developers try it out, come together, see what works, see what doesn't. Maybe we have multiple ways to calculate it. Maybe we come up with one. Again, that's a market.
All right, and on the business side of this, is there a way for one company to make a lot of money? Is there a way for you to make a lot of money? Is there some kind of financial interest in this that we're not seeing?
Well, I don't currently operate a Lightning Network node, so I don't have any money in the Lightning Network. I honestly think that it's actually beyond my computer science expertise at this point. I spent a long time just trying to figure out how to properly store my, Bitcoin. I think that type of research is something that if you want to do it carefully, it takes a lot of time, especially with somebody without a programming background. If you want to leave it on an exchange, that's fine, but it's not your Bitcoin. It's the exchange's Bitcoin, and you just happen to have a claim on it. So no, I don't have any financial interest in this. I'm trying to do some academic work here and start a conversation. I do think that there's a way for people to make money this way, to come into the Lightning Network and stake money to payment channels, but I don't know how much. And the interest rate, honestly, could be very, very close to zero, right? We're talking about Satoshis here. From the early days of the Lightning Network, I saw people basically are only earning one Satoshi at a time, right? Regardless of how large the payment was. And so, if the interest rate on Lightning Network that you can earn happens to be 0.00001% for an entire year, then so be it. Then that's the market. It could be more. I think it'll be more than that. I'm not sure how much more. We'll have to wait and see.
Would we be able to apply a similar system to Bitcoin Cash or Ethereum?
Those don't have the Lightning Network yet, at least. SegWit is what allows the Lightning Network to occur, and Part of what got me to understand the computer science of Bitcoin was trying to understand what SegWit was, and really understanding that segregating the witness allows for the transaction ID to remain stable, and that specific technical component is what allows the Lightning Network. So yeah, as of right now, Bitcoin is the only one with the Lightning Network.
So there's no interest on Bitcoin Cash. You can't earn any interest on Bcash. But I'll bet you could do it with Litecoin, right? Because Litecoin's got SegWit and the Lightning Network. You would just get your fees in Litecoin or whatever, right?
That's right.
All right, very cool, Nick. Thanks so much for being here. Is there anything you'd like to say in closing? And where can people find out more about your work?
Sure. So I'm on Twitter at time value of BTC. Same handle on Medium, and that's where I published my article. You can find the article through my Twitter profile. I'm hoping to hear from developers. I want to start exploring, the technical components to this. I do plan to write a couple more articles here in the near future to answer some of the questions that I've gotten so far about why reference rates will help Bitcoin in the long term get to reserve currency status. And just excited to keep the conversation going.
All right. And we do have one more question just as we're getting to the end of this. I think it's a pretty good question. Could nodes running the Lightning Network be seen as money transmitters by the US government?
Maybe. I'm not a legal expert, so I can't opine one way or the other, but maybe. I know that the money transmission rules have been used to prosecute people in Bitcoin. So yeah, be careful and consult your legal counsel if you're unsure.
Very good. And it does change the network. You're putting the money out there. At first, it's just for convenience or just to get some routing fees. But if you start calling the routing fees interest, it might highlight a whole bunch of government agencies, get us a bunch of people in here. So it's worth, I mean, that's not going to change it. I mean, you're still getting interest, you're still getting fees, whatever you call it. But it is worth keeping in mind what existing regulators are going to look at these new networks, and the language used, the way in which we use them may shape their view of these networks.
Sure, all the regulators, they are trying to figure out how to treat Bitcoin. The IRS has classified it as property. The SEC has come out and said it's not a security. Uh, so, different entities are going to treat it different ways. And Bitcoin is brand new. It's still, I know it's 10 years old now, but it still is brand new. It's a new asset class, and we'll have to see how the government, in different parts of the world deals with this.
All right. Well, thanks so much, Nick, for being on the show. People can check out your article, The Time Value of Bitcoin. The link's right below in the description here. If you've got some extra Bitcoin jangling around your wallet, you could donate them now to the QR code on your screen. And we'll probably be back with an early but short episode of Bitcoin Talk Show tomorrow. I have a couple of appointments to work around, and then hopefully we'll be back for the Bitcoin group on Friday. Follow us on Twitter at Mad Bitcoins, and you can follow Nick at Time Value of Bitcoin on Twitter, something like that.
Time value of BTC.
Of BTC, very close. All right, very good. Thanks so much, Nick. And until next time, bye bye.
Hi, this is Andy Hoffman of CryptoGoldCentral.com, which publishes a daily crypto